Good day, Dr. Walter Mkumbuzi, our lecturer for Accounting Theory and Financial Reporting under the Masters of Accountancy program at the University of Zimbabwe. This is the group that you gave assignments to be able to present that you're going to be uploading via the YouTube platform. The group members are Tapiwa Zuze, who is myself, and I'm also the group leader of this particular team. There is Hodhera, Bright Mureyani, Nelson Kokota, as well as Madewu. Our presentation outline for the first journal, which I'm going to be giving you shortly, is as follows. Tapiwa Zuze is going to do the introduction of this particular journal, as well as the application in Zimbabwe, how this journal is going to be applicable as far as the Zimbabwean landscape is concerned. Bright Mureyani is going to present and identify the dependent variable as well as the independent variables that were used in this particular journal. Hodhera is going to identify the theories and the models that were used in the writing and the compilation of this particular journal. Madewu is going to present the methodology which was used in this journal as well. Then Nelson Kokota is going to touch on the findings, both the positive and the negative finding. And this is going to be the outline of our journal presentation today. As I move on to the journal information itself, this journal is entitled Corporate Financial Statements, a Product of the Market and the Political Processes. This journal was written by one Ross L. Watts in the year 1977. That's when it was written and published. The country of data is Australia and the United States of America. And the country of research, the country where the author was based as he was compiling this particular journal, is Australia. And then I move on to the details on the background of the journal that we are going to be presenting on. The author, in this particular case, sought to explain the theory behind the preparation, presentation, and publishing of corporate financial statements in industry and commerce. His views are anchored on theoretical assumptions that financial statements are simply a product of both market and political processes driven within the interactions of various individuals and groups in the society, in the marketplaces, in different countries as well. And to be able to propagate his views, Watts says he cites a number of already established theoretical models, though he mainly relies heavily on the principal agent model, the economic regulation model, as well as the public choice theory. These are the fundamental theoretical models that he seems to be relying on mostly as he gives his information and also propagating his views as far as this journal is concerned. And in addition to that, he also used established accounting principles and practices that were promulgated in the country of Australia, where he was based as he was writing this particular journal, as well as United States of America, which also happens to be the second country as far as the data collection is concerned. So he used the already established accounting principles and practices to support the view that the contents and the contexts of corporate financial statements are driven both by market and political forces. So this is what the whole journal is all about. And once again, the journal name is Corporate Financial Statements, a Product of the Market and Political Processes, written by Ross L. Watts. Thank you so much as we move to the next stage. Thank you.
Today, I'm going to take you through the second part for our journal, for which I'm going to look at the dependent and the independent variable. for our journal reads corporate financial statements, a product of market and political processes. And from the journal, we got to see that financial statements are taking certain form for which there is no theory behind that. So the question is, why then financial statements are taking the current form? So in this journal, in this presentation, I'm going to look at the dependent variable and the independent variable of the journal, for which I'm going to look at what the dependent variable is and what the independent variable is, and how both are measured. Thank you. To proceed, I will start by defining what my dependent variable is. And in this context, I'm looking at corporate financial statements. I'm saying corporate financial statements is the dependent variable. Why? Because their form is influenced by something. What is it? Something. And this something, we are looking at market and political processes. What's defined corporate financial statements is that corporate financial statements are results from the interaction among those maximizing individuals in both market and political processes. This definition is from what? To proceed, I'm going to look at bonding covenants. How bonding covenants are used to measure are used in the financial statements. We are saying that if there is greater number of bonding covenants, depending on the financial numbers entered by the company, it means that there is also greater likelihood that the company or the corporation will present its financial statements. Why is it like that? It is not only to reduce agents' cost, but it is because of this covenant that is being entered by those managing the business and the owners of the business, that will lead then to the presentation of financial statements. The second measurement being total relative share of a manager. What are we saying with this one? We are saying if a manager is a smaller percentage on total equity of the company, it means that there is a high likelihood that the financial statements will be presented. Why? The issue here is to reduce issues to do with what? With agents cost. If a manager is a higher percentage in what? In corporation equity, it means the manager will act in a fiduciary position to reduce issues to do with agents cost. And moving on to the third one being the corporation's outside risk. And we are saying if there is a larger absolute amount of the corporation's outside risk date, it means that there is likelihood that the financial statements will be presented. Why are we saying so? We are saying so because those who are interested in the financial statements are those who are outside the organization, and it means that those in charge of the financial statements will then need to present the financial statements, so that those who have contributed or we have provided their capital into the business will also know the position of the company. Fourthly, we are looking at corporations' fixed assets. What are we saying to it measuring corporate financial statements? We are saying that if a company has a greater value in fixed assets, it means that there is need there is a greater likelihood that the financial statements included in the allocation of renewals and repairs and maintenance. And this, by a company by having a greater proportion of financial assets, it means that there is so much need for the financial statements to be presented, so that all those costs which reduce company fixed assets, which reduce the company's net book value, are presented. Lastly, I'm looking at loan agreements. What are we saying with loan agreements? We are saying there are certain requirements that are needed for someone to get a loan. And after getting a loan, it means that there is a change that will then happen to the financial statement. So we are simply saying loan agreements made after the requirements of an income increasing standard are more likely to incorporate covenants eliminating the particular accrual from the profits available for dividend, and this have an impact on that on the financial statement. So financial statements are measured in either before acquiring a loan and or after getting the loan. And moving on, I'm going to look at the second part, which is the dependent variable and the independent variable and how it's measured. And in this text, we are going to have two independent variables, and I'm going to look at how they are. I'm going to look at independent variables, as I said, and firstly, the first one being political processes. And just in summary, I'm saying if there is much of political or government regulation regarding to the assets, it means the assets of a company are more likely to be undervalued than in an unregulated economy. And lastly, on market processes, we are saying that there is more of risk in regulating the behavior of managers who are involved in the presentation of in preparation of financial statements, because what the power that or the incentive that they will have at the end is then to lobby with them is to lobby against a standard which has been put in place, so that their behavior is is monitored. So what we are saying here, Watts and Zimmerman had to investigate the reaction of the corporate manager to the regulation of the contents of the financial statements when information for voting decisions is costly, and they had to argue that the corporate manager is the incentive to select an accounting procedure and to lobby against with politicians and bureaucratic for accounting procedures, which will then reduce the net income reported in the financial statements, and this becomes a crisis. So we are saying our independent variables are two. We have market processes and we have political processes, and that's it about the dependent and the independent variables. Thank you.
Hello, ladies and gentlemen. I am going to take you through the theories and models that are incorporated in the journal Corporate Financial Statements, a product of the market and political processes. The first theory is the price theory, where corporate financial statements are a product of interaction of economic agents in an environment that is influenced by market forces and political processes. Another key theory is the agents theory, where we have a relationship between the principal and the agent, the principal being the shareholders and the agents being the employees who are mandated to run the corporation. There is usually information asymmetry between the agents and the shareholders. Therefore, audited financial statements become the bridge between the information asymmetry gap between shareholders and the agents. Another theory is the public interest theory, which entails a situation where if corporates are left on their own devices, the tendency is to shortchange the public Therefore, government has to intervene and demand what must be disclosed in financial statements so that the welfare of the public is protected. Another important theory covered in this journal is the enforcement theory, where corporates thrive by creating a good reputation in the public domain. When corporates deviate from good practices, private suits can force the corporate to present accurate financial statements. Another critical theory in this journal is the stakeholder theory, where the firm has to provide information which will help different stakeholders. Two types of stakeholders can be identified: primary stakeholders, who are the shareholders, and also the creditors. Then there are also secondary stakeholders, who include suppliers, government, and customers. Therefore, financial statements must disclose information that can assist all these stakeholders to make fruitful decisions. Thank you.
Hello and good day. My name is Madewu, reg number 19994D. I am proceeding to present the methodology section for the journal paper written by Ross L. Watts, titled Corporate Financial Statements, a Product of Market and Political Processes. The researcher took a pragmatic research philosophy whereby his views and beliefs were used to define and generalize the worldview with regards to the preparation, presentation, and publishing of financial statements. Secondary sources of data were used, and the data was collected in Australia and the United States of America. A grounded theory, research design, was used within this paper. The author designed the research in such a way that he crafted 7 hypotheses for further testing and authenticating his views through supporting the same with already established theories and models in accounting and financial reporting. For example, the agency theory and the public interest theory. Case studies were used within this paper, whereby the author relied on practical events, processes, and activities that occurred in Australia and the United States of America to authenticate his views, denoted through the 7 hypotheses, and ultimately to establish his views that corporate financial statements are indeed a product of market and political processes. The author used literature study as well as document analysis. For example, he used published journals and articles by other authors such as Jensen and Making 1976. He also looked in the work of Chambers on the use of statutes and regulations to authenticate reported financial information. In addition, he also used the work and publications of the American Institute of Certified Public Accountants when he examined the objectives of financial statements. The population for the study was drawn from all entities across the world. The author generalized his study to cover and draw conclusions on all corporate entities the world over. His sample size, however, was drawn from Australia and the United States of America. The author's symbol picked corporate entities, events, and activities that occurred in Australia and the USA. The findings and conclusions drawn from this symbol were used to generalize the author's view that corporate financial statements are a product of market and political processes. I thank you. I leave this time to the next presenter.
Good afternoon. I shall be looking at the positive and negative findings from our journal titled Corporate Financial Statements, a Product of the Market and Political Process by Roswards. So I shall start with the positive findings. The very first positive finding from our journal is that the financial statements are indeed a product of both market and political processes as illustrated through the theory of economic regulation. That is one. The second positive finding is that there is indeed a positive relationship between self-centrism and the preparation, presentation, and publishing of corporate financial statements as illustrated through the agent's theory. The contents of financial statements are said to be an equilibrium outcome of individuals maximizing their own interests, that is according to Watts, 1977. Thirdly, there is usually information asymmetry between the agents, that is the managers or accountants, and their principals, who are the shareholders in most cases, which affected the preparation, presentation, and publishing of corporate financial statements. The fourth positive finding is that corporate financial statements are prepared with an objective of satisfying all the stakeholders, that is in accordance to the stakeholder theory. Then the fifth one is that the political entrepreneurs use high profits to create a crisis so as to regulate the same. These are the positive findings in as far as our journal is concerned. Then I'll dwell now on the negative findings. The first negative finding is that regulation in itself will not eliminate all fraud. This is due to the existence of information asymmetry between the preparers of corporate financial statements and the regulators. Usually that information asymmetry will always exist. Then secondly, the government regulation does not necessarily promote comparability of corporate financial statements prepared under different jurisdictions. So whatever form of regulation that will be imposed by government, it will not promote comparability of the corporate financial statements, especially under different jurisdictions. Then the last one on our negative finding is that the agent's costs do not necessarily eliminate the principal agent problem, which means that even if the shareholders would part with a lot of incentives to managers to try and align them to their thinking, to their way of thinking, managers will always act in their own best interest, and thus all those costs that may be incurred by the shareholders or by the principals will not eliminate the principal agent problem, and that problem will still be there. I thank you.
So, having heard in detail background behind this particular journal, by Watts. We've been given the dependent and independent variables. We've been given the theories and the models that were used in this journal. The methodology has been explained in detail, as well as the findings, both the positive and the negative ones. Now, we now move on to the last part, which is the application of this journal in the Zimbabwean industry. Is this journal still applicable? Is this journal still worthy to be looked at? Though it was written way back in 1977. And we say yes as a group. It is possible. It is very much applicable. And the following are the points that we have raised as far as the application of this particular journal in Zimbabwe is concerned. Number one, external auditors and government agencies need to strongly interrogate the use of provisions, estimates, and professional judgments in the preparation of financial statements. Such practices are prone to negative creative accounting, where executives may hide profits or losses from the public disclosures, thereby distorting the fair view presentation of corporate financial statements. Falsified financial statements are a danger to the public, as they may give a wrong impression of the going concern status of a firm that is already facing liquidation. We have said it, that there are a lot of market forces, there are a lot of political forces behind the preparation, the presentation, and the publication of financial statements. And in most cases, these forces' requirements go contrary to the fair view presentation of the financial statement. So as a result, those who do the independent checks and balances, who are the external auditors and government institutions, need to be interrogating big time, especially the provisions, the estimates, and the professional judgments that are used in these particular financial statements. And some of these government entities are Zimbabwe Revenue Authority, the Reserve Bank of Zimbabwe, the National Social Security Authority, NASA, Zimbabwe Stock Exchange, even the Ministry of Finance itself, and also the State Enterprises Reform Agency, SERA. It is also one entity which can be able to take to task those particular public entities that publish and present their financial statements to the general public. So it is important that these independent regulators, these independent people who do the checks and balances, interrogate these things. Otherwise, because of these particular forces, the general public may be swayed and be able to make decisions based on badly prepared financial statements. Number two, Zimbabwean authorities need to be wary of political entrepreneurs who may create artificial crises through falsifying corporate financial statements. Usually, this is done with an objective of either receiving government bailouts or pushing political ambitions through stage-managed rescues. In the past, Zimbabwe has had a number of corporates being placed under judicial management, and yet their executives continued to live lavish lifestyles. This is a key question. We've had many companies, many banking institutions being placed under judicial management, and the executives still continue to live lavish lifestyles. And the question is why? This is the reason, according to Watts, that some of these crises are self-created by political entrepreneurs. They create artificial problems so that they come through another door and try to solve the same problems, thereby selling their own stock to the market for political purposes. And some of these institutions can also be then used to be able to get bailouts from the government itself, which are unjustifiably so, because a lot of things have been done as far as the creative accounting is concerned in the financial statements. So this needs a proper interrogation from the Zimbabwean authorities. Otherwise, both marketing and political forces can be able to lead to the manipulation of financial statements to the detriment of the government and the general public itself. The third and the final point is that external auditors and industry regulators need to interrogate the revaluation of assets disclosed in the published financial statements. The market dynamics and the politics of the day can sway corporates to either overvalue or undervalue their assets with a specific economic or political target. The same goes to the valuation of financial instruments as well, which requires scrutiny from the Zimbabwe Stock Exchange. There is a lot of manipulation that goes on as far as the assets valuation is concerned. It depends what the company wants to achieve. Sometimes it can overvalue, sometimes it can undervalue. It also depends, again, even with the political connections that the company has. You know, there's a lot of thinking behind the publication of financial statements. There's a lot of things hidden. And that's why we have seen the world over corporates that also tend to have good balance sheet values on their assets. They struggle big time and fold. These are the reasons. So based on this particular three reasons, we see that this particular journal, Corporate Financial Statements, a product of market and political processes by Ross L. Watts, is still applicable in today's world, particularly so in the Zimbabwean landscape. So this has been the presentation as far as our journal number 1 is concerned. Thank you so much. Have a good day. Dr. Mkumbuzi, have a good day, the rest of the team. Thank you.